Despite a tumultuous week for banks, top U.S. officials remain confident their banking system is strong.
I can reassure the members of the committee that our banking system is sound and that Americans can feel confident that their deposits will be there when they need them.
I want to be very clear. What we're seeing with the Credit Suisse is a distinct situation. It does not speak to the current economic environment that we're in.
After the collapse of two U.S. banks this week, Credit Suisse was feared to be next, but it's received an emergency lifeline of more than $50 billion from the Swiss central bank. Meanwhile, in the U.S., 11 banking giants are injecting $30 billion into First Republic to prevent it from becoming the third U.S. bank to fail. So, is the global banking industry in trouble? David Rosenberg is the founder and president of Rosenberg Research and Associates. Mr. Rosenberg, thanks for doing this.
Well, thanks for having me on. You can call me Dave. Only my kids call me Mr. Rosenberg.
Okay, all right. It's a deal. You can call me David as well. But look, it's been a scary week for the banking system, right? When banks start going down and having runs and needing emergency loans, people get worried. How concerned should Canadians be with what we're seeing out of the States and in Europe?
Well, look, in a situation like this, the biggest worry at the beginning is financial contagion. You know, does this become systemic? And everybody always thinks that lightning strikes twice, and oh my God, is it going to be a repeat of 08 or 09? And although I'm known as typically being cautious or very bearish, I'll say something pleasant, which is that no, this is not 08 or 09. I'm not going to say it's necessarily idiosyncratic either for these banks, and there could be other knock-on effects. But you know, you do have to be impressed at least with the quick policy response. I mean, look how long it took the central banks and the government to respond to the housing and mortgage crisis back in 2007 and 2008. They sat on their hands for a long time. So they've been much quicker, as you've seen with these new backstops from the Fed and the unlimited deposit insurance, which I think is not well understood or appreciated, but very important in terms of ring fencing at least the unrelenting deposit inflows or the risk that would continue, especially in the small and regional banks.
Right.
And now today, you know, you have the Fed cajoling these U.S. banks to pump in $30 billion of deposits into First Republic Bank, which was, of course, the next in the dominoes. And the dominoes may continue, but at least the policy responses are aggressive, and at least the central banks and the authorities aren't waiting around. I don't think this has a major impact on Canada. You know, look, the situation from a broader perspective is that, you know, we're a small open economy. And the old saying about, you know, the U.S. catches a cold and we get pneumonia. But in terms of the banking sector, you know, we only have a couple of regional banks here. The big banks are very well capitalized, very well supervised. There's not going to be a run on the Canadian banks. And I would say I don't expect there's going to be an ongoing run on the U.S. banks either. I think it's just more that the banks are going to be very focused on their balance sheets as opposed to expanding their asset base. So what I'm saying here is that I think that what's going to happen in Canada and the U.S. and maybe even globally is we're going to go through a contraction in credit. So
right.
As everybody talks about inflation right now, this is going to be more deflationary, and it's going to cause the most likely reinforce the trend that we were seeing anyways from expansion to a weak economy to recession. So That's what's staring us in the face is a recession. But in terms of contagion effects to the Canadian banks, of everything on my worry list, that's not near the top.
Okay, there was a lot in that answer, but you did mention dominoes and knock-on effects. I just wonder, the swift policy response, you think it's put a sufficient floor underneath this, but what would the knock-on effects potentially be, you know, for people at home worried about what this means for their savings, for interest rates, and for the economy?
Well, okay. Well, the economy is the easiest part. You know, in terms of the question is, we all know, you know, we have an inflation cycle, not just consumer inflation, but let's face it, we had an asset bubble. And in Canada, you know, residential real estate, that was the biggest bubble in history. And we have housing bubbles really around the planet. Canada's right up there. We had an equity bubble. These bubbles burst, you get impairment of asset values. and these higher interest rates affect the present value of discounted cash flows, and everything sort of resets with a lag. So, from my perspective, what this is going to do is just layer on more complexity. I'm not so sure who the next institution is going to be that had similar characteristics. I mean, you can argue that, Silicon Valley Bank had its own particular set of characteristics. No one bank is always the same.
Right.
But there's going to be more of these coming. It's going to cause more anxiety. It's going to cause more volatility. I don't think we're going into a major unrelenting banking crisis, but I think we're going to have these rolling situations of one bank, small, regional. It's not going to be the big banks. And then there's going to be a policy response. So what I think is going to be in our lives for the next while is going to be several months or quarters. It's not going to be just days or weeks. It's going to be more of this heightened anxiety, uncertainty, and volatility. I think with 100% certainty, I always say nothing is zero and nothing is 100, but I'll throw that into the dustbin and say that a recession in the United States, I don't see how Canada escapes it either, is 100% likelihood. And I think it's either call it a second or third quarter event. It's not here today, but I think it's going to be in the next 3 to 6 months. But that's my big concern, is that these banking sector issues are taking place without the recession even having started. So imagine when the recession starts and that causes unemployment, it causes impairment of cash flows, and it causes higher delinquencies and defaults. And that has a knock-on effect on the banks. Now, I come back to Canada. No, this is not going to be an issue of a balance sheet or capital issue, but it's going to affect their earnings. And so I think that if you're an investor in the banks, it's not so much you're worried about their capital. The capital is sound. It's really what the earnings outlook is going to be, because the banks, after all, are cyclical, and they will have their earnings adjust to how a recession affects almost everybody.
Right.
So that's my primary concern, is that everything we're seeing right now, if there's any certainty in this uncertainty, it's that the tightening in financial conditions that we've seen already, the elevated level of uncertainty, is going to reinforce the trend towards a recession. And that means if you are investing, I would say that be invested in areas of the market that you think are recession proof. There's not that many. Or just buy long-dated government bonds. I think they will be a very good place to be.
So just as a final point, sir, if you do anticipate a recession in the next 3 to 6 months, and that one of the knock-on effects of what's happening in the banking crisis is a retrenchment of credit. We're already seeing the economy slow by design because of the interest rate hikes from central banks. Where do you see the interest rate policy, the monetary policy of the Bank of Canada going? We've got a pause right now. Does that continue? Could we see more upward pressure?
I don't see the rationale for the Bank of Canada to raise rates, and I tip my hat to Tiff Macklem for being the first to read the tea leaves. Of course, in Canada, the mortgage market, housing market is different. We have a bigger housing bubble here than almost anywhere in the world, and mortgages are resetting very quickly. So the transmission mechanism from what the Bank of Canada has done is hitting the economy here more quickly, but it is going to hit the United States with a bit of a lag, and I think that the Fed looks like they're going to raise rates again next week. I think it's a mistake, but they're still hell-bent on fighting this lagging indicator called inflation. There's nothing suggesting that inflation is going to go up in the longer term. Every survey and the market-based measures are showing that inflation expectations are actually going down. And that's a great leading indicator for inflation. But I think that the Fed is so embarrassed by missing transitory to such a huge degree. It's like once burnt, twice shy. And so I think that the big risk is that we get the recession. The recession actually will look after the inflation. I think in the second half of the year, I think the Fed will be done next week. I mean, and I think the ECB, the thing about the ECB today, I mean, Lagarde went 50 basis points. I was pretty surprised, but then they took out the forward guidance that they feel they got to do more.
Right.
So I think that the Bank of Canada was a bit of a trailblazer here. They went on hold. The ECB went 50, but then almost hinted today that they're going on hold. I think next week the Fed goes 25 in a show that, well, we still have our eyes on inflation, don't you worry. And then I think they're done. And I think in the second half of the year, as the recession pressures intensify and the demand destruction looks after the inflation that we've had to deal with in the past couple of years, interest rates, after all, are cyclical, and they're going to come down again in that context. I think past past the summer into next year. If you're bracing for lower interest rates, if you're a renter that's been waiting for the opportunity to get lower rates and lower home prices for an affordability standpoint, boy, the renters in Canada are going to come out a big winner out of this.
Okay, David Rosenberg, thank you so much for your time today. We appreciate it.
Thank you.